Welcome to Uncovering Trusts, a podcast by the Edison Group, a content-led IR business integrating analyst content, digital targeting, and investor engagement. Tune in to find interesting investment ideas and to stay on top of what's happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Miloš Pabst, Director of Investment Trust Content at the Edison Group, who will talk about the Baker Steel Resources Trust, whose ticker is BSRT. Miloš, thanks for joining us today.
Hi, Will. Thanks for having me.
So regular listeners may remember that we spoke about the trust in August last year. However, for the benefit of those less familiar with the trust, can you start with a brief introduction?
Yes, with pleasure. The trust pursues a bottom-up, value-focused strategy of investing in a concentrated portfolio of 10 to 15 unlisted junior mining companies, which may be involved in the exploration for and production of base metals, precious metals, bulk commodities, thermal and metallurgical coal, industrial minerals, and uranium. Its portfolio may include single asset as well as diversified natural resources companies.
Okay, so it sounds like quite a concentrated portfolio. So I'm wondering how the trust managers limit risk.
Yeah, that's a fair question. In many cases, the company seeks to mitigate the risks arising from investing in early-stage mining businesses by investing through convertible loan notes, as well as providing funding in stages as development milestones are met. The share of convertible loans in the trust portfolio went down to around 5% in recent years as several holdings matured and the trust converted into straight equity in recent years. But of course, this share may go up when the trust redeploys some of its future exit proceeds into new investments. The trust also invests through royalties, which offer the potential for regular income once projects come on stream. And it also uses special clauses in its investment contracts, such as ratchets and dilution clauses. This, for instance, allowed it to convert into a larger equity stake in Futura Resources, given the project's delays this portfolio holding faced in the past. The trust also screens investments from an ESG perspective. And finally, the trust often has a board seat.
Okay, thank you. That's helpful. And do the managers have any skin in the game?
Yes, they own over 20% of the trust.
Okay, so a fair chunk. That's encouraging. So maybe now you can tell us a bit more about the market backdrop and also the themes that the trust is a play on.
Sure. I will maybe start with mentioning that junior mining projects worldwide were in recent years affected by a combination of high interest rates, elevated inflation, and geopolitical headwinds. However, a turn in the interest rate cycle may drive a recovery in global M&A activity in the natural resources sector. Monetary easing coupled with geopolitical uncertainty also proved supportive for precious metals, as illustrated by the recent gold price rally. Finally, secular drivers such as the green energy transition and digital infrastructure should drive high demand for certain industrial and specialty metals, which may be coupled with supply constraints for some of the commodities and in turn support prices. As a result, Baker Steel expects a market deficit across a number of commodities by 2030, including for copper, cobalt, aluminium, silver, nickel, and lithium, among others. I would note that some metals are classified as critical metals, for instance, tin in the US, Germany, and Indonesia.
Okay, thanks. That's interesting. So now I understand that the trust returns come not only from favorable commodity prices, but its manager also focuses on capturing the alpha arising from the development progress made by its businesses as they clear the pre-feasibility and definitive feasibility study stages and move towards construction and production. Can you give us an update on the progress made by its major holdings?
Of course. Maybe I would add to what you just said that more recently, because investor appetite for funding development projects has been more muted, the manager realized that a financing event has become a quite important valuation catalyst for junior mining projects, allowing to generate a high valuation uplift in a relatively short period of time. Now, coming back to your question, the trust's current portfolio includes several maturing assets, many of which are already in production. The trust's manager believes that upon full production ramp-up of its major projects, its portfolio should generate significant royalty and dividend income, which would represent a double-digit income yield on its current market capitalization, although the exact level of income is, of course, dependent on the commodity price environment. Most of this potential comes from two assets, Futura Resources and Semos Group, which plan to complete their production ramp-up and expansion in the next 12 to 24 months. These two holdings represented close to 2/3 of the trust's NAV at the end of February 2025.
Okay, so it's a big chunk of the NAV. So maybe you can give us some more details on both of those projects.
Sure. Futura Resources is the owner of two coking coal mines in Australia. It has been ramping up production at its Wilton coking coal mine in line with its budget, and after successfully securing an offtake finance agreement, it also saw encouraging development progress at its second coking coal mine, Fairhill. Management recently estimated that the project should generate an overall EBITDA of 60 to 80 million Australian dollars by 2025 or 2026. The trust exposure to Futura is a combination of a 1.5% gross revenue royalty, a 4.6 million Australian dollar convertible notes with a 21% coupon, and an equity investment representing a 23.4% stake on a fully diluted basis. The trust already earns interest on the convertible note and started receiving royalty income on Wilton's production. Management estimates that upon full ramp-up of both coking coal mines, royalty income to the trust could reach around 4 million Australian dollars. Dividends represent further significant mid to long-term income potential, though in the short term their level will be dependent on Futura's debt repayment schedule. Now, Semos Group is a Moroccan-based cement producer which has two major investment projects: a compact calcination unit, which should be completed in the first quarter of 2025, and a second grinding line, which should be installed sometime in 2025 and could lead to a doubling of production. These projects offer the prospect of a significant increase in earnings from 2025. Last year, Semos increased its sales by 10% with an expected EBITDA for 2024 at 8 million euros, and the trust's manager expects around 8 to 12 million euros this year. On completion of its two major investment projects, Semos Group plans to adopt a progressive dividend policy. I had the chance to visit the company's cement grinding line in southern Morocco in October last year and published a detailed research note discussing the key takeaways from the visit, which I encourage our listeners to read to gain more insights.
Yeah, that's great. Yes, that report can be found on the Edison website. So thanks for that. It's all useful background. Are there any other holdings you'd like to highlight?
Yes, another important holding is the 1% net smelter royalty in the Bilboes gold project in Zimbabwe, which made up close to 9% of the trust's end February NAV. The trust sold its equity stake in the project to the listed mining company Caledonia Mining Corporation in exchange for shares in the latter a while ago, but retained the royalty. Caledonia Mining Corporation operates the Blanket mine and, apart from Bilboes Gold, also holds one pre-development project and one early-stage exploration project. Baker Steel Resources Trust highlighted in its interim report last year that at a gold price of 2,400 per ounce, so significantly below the current spot price, it would receive more than $3 million of royalty income from Bilboes Gold per year. However, I must note that this project is at an earlier development stage than Futura Resources and Semos, with production launch likely after 2026. But in the meantime, the trust receives regular dividend on its equity stake in Caledonia Mining Corporation. I guess I would also mention Nucir, which is the owner of a copper mine project in Norway, and which the trust recently sold to the Canadian-listed Blue Moon Metals in exchange for the latter's common shares. Was basically a reverse takeover, and the trust will hold around 10 to 12% of its enlarged share capital. The trust's managers believe that the project could move to production by the end of 2026. Blue Moon Metals fully owns a zinc, copper, gold, and silver mining project in California. And finally, I would note that the trust still holds a net smelter royalty in the Prognos silver mine in Russia. This investment was heavily written down following Russia's invasion of Ukraine, so you won't find it among the trust's top 10 holdings. While the previous owner of the mine, the Kazakhstan-based Solidcore Resources, formerly known as Polymetal International, sold its Russian assets, including the Prognos mine, to Mangazia Plus back in 2024, the obligation to make the royalty payments to the trust remains with Solid Core Resources. The manager expects around $1 to $2 million of royalty income from this asset per year, and the trust advisor recently said that the trust should start receiving royalties this year. Alternatively, Solid Core Resources could offer to pay Baker Steel Resources Trust for cancelling its obligation. And please note that this asset is currently valued at a mere $1 million or so in the trust's NAV.
Okay. You mentioned the consideration for the disposal of shares in Bilbos Gold and Nasir was a stake in the listed acquirers. I'm just wondering, are there any other listed holdings in the trust portfolio at present?
Indeed, there are. Beyond Blue Moon Metals and Caledonia Mining Corporation, the trust holds investments in multiple listed companies, such as the gold producer Metals Exploration, Tungsten West, which is a developer of the tungsten and tin Hammerden mine in the UK, First Tin, which has assets in Germany and Australia, as well as Silver Axe, which holds the Recuperada silver project in Peru.
Okay, so what is the overall share of listed holdings in the trust portfolio?
It's around 22% overall, based on end February 2025 data.
Okay, so thank you for this detailed and insightful conversation on this interesting niche mining trust. You've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about Baker Steel Resources Trust and other investment companies we cover, please visit www.edisongroup.com.